Good morning, options traders. Welcome, everyone. Well, I was doing a webinar last week and talking about some of the hedges and rolls and strategic ways of placing these orders, and at different times was using markets, limits, and sometimes what's called an or better order. And I had some traders saying, what's an or better order? I've never heard of it. So I thought, good chance there's some people in here who haven't heard of it either. So let's take a look at this. So my primary reason for this video is for the or better order. But in order to truly understand it, we have to kind of backtrack and look at markets and limits first. So let's take a look at how an or better order works. So to kick things off, remember that there's really two basic ways you can place an order in the market. Whether you're using shares of stock, options, doesn't matter. You basically can choose from a market order or a limit order. Now, if you choose a market order, it's guaranteed to fill or to execute. We know the order is going to get done, but it does not guarantee the price. You can't be 100% certain what price you're going to receive. So for instance, let's say that we're looking at a $50 call quote and we see the bid of 5 and the asking price of 540. And you place an order to buy one $50 call at market. So on your broker's platform, you check off this little box that says market order. What's going to happen? Well, you're definitely going to get filled, and you'll probably get filled right here at 540 because they're saying we want to get the order filled. You're a buyer, the asking price is a seller. And so that's probably where we can get the order executed right now. Is it possible it could come back at a little lower price at 535? Sure. Could it come back higher at 545? Absolutely. Again, you have to be flexible on the price because we're saying to the broker, you have to go out and get this option. And in order to do that, we can't lock them into a certain price. So that's how the market order would work. Well, what if we wanted to place an order to, let's say, sell at market? And these are the current quotes. Well, now we're probably going to get filled down here at the bid at 5. So as before, could it be a little bit less? 495? Sure. A little bit higher? Sure. But most likely going to come back in a matter of seconds at 5. So that's the market order. So the main reason that we use those is when you absolutely positively need to get it filled. So let's say you're going into the closing bell and you've got some short options that you want to buy back. Don't mess around with the limit orders. Get it done. But for the most part, especially for options traders, because bid-ask spreads can get wide, we typically use a limit order. And with a limit order, it guarantees the price, but it does not guarantee the fill. Notice that it's the opposite. Okay, we are guaranteeing that we are getting a certain price, but we can't be certain that it's going to get done. So going back to our quotes here, let's say that you go, I don't know if I want to buy at market and get filled at 540 here. Let's see if I can maybe get a little lower price. So in order to do that, I need to place a limit order. So I might say buy one $50 call at a limit of 530. For instance, something less than the asking price. And so in order for that to happen, now the only way I can get that order filled is if the price comes back at 530 or less. So by putting a limit order, I'm just saying that is the maximum price that I'm willing to pay. And the exchanges assume, and rightfully so, that if you're going to be happy with 530, you should be happy with 525 or less. So yes, anything at 530 or below could come back as a fill. Now what's interesting about this is that because we're between the bid and the ask, we're going to actually move the bid. The bid is going to be 530. That's us. We're a buyer at 530. And notice that we've tightened up the spread. It used to be 5 to 540, a 40-cent spread. Now it's 530 to 540, 10 cents. So we're now advertising that we are a willing buyer at $5.30. And so if somebody else, another trader, is willing to hit the bid and complete the order, they can do so, and then the order will get filled. But the main point to understand is that this order cannot get filled for anything above our limit of 530. So let's go back to our quotes here. What if, on the other hand, we said, I'd like to sell my options, but I don't know if I want to get this bid of 5, or at least down in here. I think I can get something more. Let me see if I can get 520 for it. Well, if that's a limit order, a price that you have in mind, you need to send it as a limit. So my order might look like this: sell one $50 call at a limit of $5.20. And what we're telling the broker now is that it can only get filled at a price of $5.20 or more. So as before, they're assuming that if you're happy with a selling price of $5.20, you should be even happier if you can get it filled for $5.30 or more. So sometimes new traders think that what you're saying is it can only come back filled at exactly $5.20, and that's not true. We're just saying that's the minimum price for the sell order, and it would be the maximum price that we're willing to pay for a buy order. Now, also, because we're between the bid and the ask, notice that the bid is 5, the asking price is 540. Our limit is in between here. We're going to move this asking price from 540 to 520. We're a seller. Sellers place asking prices or offer prices. And so we've now narrowed the spread from 40 cents down to 20 cents. And we're now advertising to the world, I am a willing seller at 520 if somebody would like to lift the offer. But the key points to understand is that the limit orders cannot be filled unless they meet your limit prices or a price that is more favorable to you. Now, sometimes, it should go without saying, but sometimes traders say, well, is there a way to guarantee both? Unfortunately not. That would be too good to be true. Because if we're looking at our quotes here, what could you do? You could say, well, let's see, let's buy one $50 call at a limit of $1 and be guaranteed to get it filled. And we get it filled in a few seconds. We turn right around and say, you know what? I think I'd like to sell it now for a limit of 10 and be guaranteed to get it filled. So needless to say, you could bleed out every dollar out of the entire world's economies if you could just name your prices and be guaranteed to get them filled. So in the markets, you get one or the other. You can either do a market order or you can do a limit order. But there is a third choice, and this is the one that a lot of traders aren't so familiar with, and that is the or better order. And an or better order is really a hybrid between the market and limit orders. It's a hybrid because it is a limit order. You have to specify a price, but you're doing it in a way that it is highly likely to fill. So it acts a lot like a market order. So to do that, you'll place your buy orders above the asking price and your sell orders below the bid. So if we go back to our quotes right here, and we're seeing the bid 5 offered at 540. Why might I use an or better order? Well, let's say the markets are really fast, something that happens a lot these days during coronavirus, and it was just at 510, then it goes 520 and 530 and 540, and we're going, gee, I just can't keep up. I'm trying to place a limit order here. I don't want to go market, but I'm trying to get it filled, and every time I start typing up the order, it changes. Well, what I can do is try to jump in front, and I might say, buy one of my $50 calls here at a limit of 560. Now notice that my price is above the asking price. And because of this, it's highly likely to fill. But what I'm telling the broker is that I'm willing to pay any price up to and including 560. So could it come back at 565? No. But could I get 560? Sure. Anything less, including 540? Absolutely. All of those are possibilities. Now, another thing to understand is the phrase or better. A lot of times new traders go, no, I don't want it or better. I want it 560 or less. Well, that's what it means. It means 560 or a price that is better to you, a more favorable price. So it's very simple. Just go into your broker's platform. We see the asking price of 540. Type in a limit of something above that. And sometimes you'll get a pop-up menu that says, are you trying to place a stop order? If not, we're going to place this as an or better order. And that's all it's telling you. Now, what about a sell order? So we're looking at our quotes here. We're seeing it maybe falling quickly. And I don't want to put in a market order, but maybe I'm willing to take 480. So I might place my order, sell one $50 call at a limit of 480. So notice that my price is below the bid. And so I'm saying, yeah, I realize that it's falling. I'm willing to take anything at 480 or above. In other words, 480 or a price that's better to me. So could it come back filled at 480? Yes. 485, sure. 490, sure. Anything is possible at 480 or above. It just cannot come back below 480. So that's where the limit order comes in. Now, another thing, notice that we are not going to move the quotes like we did with the limit order, and that's because we are what's called away from the market. We're not between the bid and the ask. So I hope this helps you to understand what an or better order is and possibly gives you a brand new tool to use for these volatile markets. For anyone who'd like to learn more about the art and science of options trading, please check out the Alpha Trader course and strategy lab at optionsatoz.com. Also, please join us on the Facebook trading group Options A to Z, and you can find a link in the description below.